If you've listened to our podcast before, you know that we are good friends with the Money Vikings, and we think that they have a lot of good knowledge and, just a wealth of knowledge to offer. About 60 years worth of knowledge and trading experience between the three, between Greg, Bob, and Jerry. Now, I have some good news for you, because they have announced a premium program. It's the Money Vikings MVP premium content, okay? And I have to tell you this right now, if you are new to the market, you have got to have somebody to mentor you through it, because 75% of all new market entrants will lose all of their money in the first year, and you have to have somebody that will guide you through it to prevent you from making these mistakes that most people do. And with this MVP access, this premium content, you will get direct access to Greg, Bob, and Jerry on Discord. That's the most important feature of this program, in my opinion. They do also have access, they will give you access to other things such as hot trades, weekly newsletters, technical analysis. Hey, it's ad free. That's cool too, right? Guides and tutorials, tools and custom technical indicators, exclusive analytics and informative articles, and then, as I said, exclusive direct access to Greg, Jerry, and Bob, who have over 60 years of experience between them. Now, if you listen to this podcast, you need to get a pencil, and you need to get a paper, and you need to write this down, because you get 25% off. Once you go to moneyvikings.com and you sign up, you'll get to enter in this code. It's capital TMV P1CK1NS. That is all capital TMV P1CK1NS. An easy way to remember that is TMV Pickens, but the one replaces the I. So go to moneyvikings.com, claim your discount for being a Chinchilla Picking Podcast listener, and conquer your financial freedom.
Hey everybody, welcome to the Chinchilla Picking Podcast. My name is David Underwood. I'm here with Brandon Beaver. It is October the 12th, 2021. As always, we hope to be entertaining, educational, and uplifting, because we want everyone to make money. Brandon, how are you doing today?
I'm good. I just woke up. I took a nap.
I know, right? What's it like, just that life of freedom and living it up and, having all the day to yourself, man.
It's tiring.
So, yeah, the last time I retired for a little bit, I got really good. I mean, this is how long ago it was. Got really good at Star Wars Battlefront. I played that like every day, and I was always a top guy on that, and I just killed it at that just because I was bored. I mean, I would watch stocks, make a trade, and be done for the week by Monday. I'd have over 5%, and I'm just like, okay, what do I do the rest of the week? Battlefront.
The game that we're playing right now is a few years old, but it's Just Cause 4.
Nice.
Yeah, it's a pretty good one. It's a pretty good game.
Well, good.
I've been on Major League Baseball too, MLB The Show 21. That's been occupying a lot of my time, as well as stocks in the market, as usual.
I mean, yeah. Stocks, seriously, it's hard for me to tell people this, and, not for me to tell people, for people to relate. It's like I can sit there and read analyst reports, news stories, watch CNBC, Bloomberg, what have you, all day long, and just thoroughly enjoy my day. Like, I would just enjoy it. It's fun for me.
Yeah, it's a good time. The way the light's hitting my face is making my eyebrows look weird. It's distracted me. Do you see this?
Please say you're going to edit this out.
No. It's bizarre. It's making me okay. Maybe I'm just tired. I don't know. I'm probably just tired. Whatever. Let's move on.
You're the evil genius here. There we go. So anyways, guys, let's get to it here. That's our welcome. Let's go over the rules. Rules are Brandon and I get together before the show, about 15 minutes, somewhere around there. We tell each other what we're going to talk about, but we do not discuss it. That way we get a little taste of what's going to happen. We save the actual discussion and back and forth for you live on the show for you guys to hear, and we go into it. So as some of our guests will attest, that is the way it is. Before we get into it, I do want to make one plug. If you live in the Cincinnati, Ohio area, right, Chinchilla Pickin' is paying for people if they want to. Join us on the Jingle Bell Run here. Help a good cause. Money goes to Arthritis Foundation. We will pay for your entry fee. Just reach out to us. Let us know. We'll be happy to meet you there, listeners, and answer questions. And we'll take a big group photo of everybody wearing Chinchilla Pickin' shirts. But it'll be a good time. Please let me know if you're going to attend. Reach out to us, DM us. In the meantime, Brandon's going to head us off on the show tonight. Brandon, go right ahead.
And we talked about the jobs report on the little Break with Brandon special I did a couple days ago. It's left more questions than answers. Normally in the situation in a rising rate environment, I would recommend financials, but they've been on quite a tear. We called Jeffries a couple of months ago as a buy. It's up 40% since we called that buy. It just seems like everything that should be on a tear has already been on a tear. We would say small caps would outperform, but the Russell 2000 has already priced every bit of good news in my opinion. Plus, when you talk about the small caps are really, really they're really sensitive to the unemployment rate, and we had a big miss on the jobs report on Friday, so I'm a little iffy about the Russell 2000. So the answer to this, what do you do with your money? And it just always comes back to the same thing. You just buy quality stocks that have been beaten down. We called Facebook last week. I'm still sticking with Facebook as a buy. And I'm going to talk about Taiwan Semiconductor, which is another stock that I think belongs in anybody's portfolio. But before we get into Taiwan Semiconductor, let me go over just a couple of important definitions because the semiconductor industry is rather complex. When we talk about fabless manufacturing, that is design and sale of hardware devices and semiconductor chips while outsourcing their fabrication to a specialized manufacturer called a semiconductor foundry. So if I say somebody's into the fabless manufacturing, that means that they're outsourcing their fabrication or design to a specialized manufacturer called a semiconductor factory. In the microelectronics industry, a semiconductor fabrication plant, commonly called a fab, sometimes called a foundry, is a factory where devices such as integrated circuits are manufactured. If a foundry does not produce its own designs, it is known as a pure play semiconductor foundry. When a foundry produces its own designs, it is known as an integrated device manufacturer or an IDM. One of my favorite things about Taiwan Semiconductor is that most of the leading fabless semiconductor companies such as AMD, Apple, ARM, Broadcom, Marvell, MediaTek, and NVIDIA, Dave's favorite, are customers of Taiwan Semiconductor, as are emerging companies such as All-Winner Technology, High Silicon, Spectra 7, and Spreadtrum. They've got some of the largest companies as their customers. That's kind of what led me to Taiwan Semiconductor. Well, let's see, if this is a buy. It's been beaten down about 12% off of its highs. So I don't know. Where would we be without my research, Dave?
We would be lost without your research because you really go in depth. You dig into like these. You try to get to the root of the root cause of how all these things affect each other. I mean, you looked into a Japanese pension fund that was moving markets. I mean, you go really head first into this research, and I love it. I love it. You give me good information.
Did you say you're the John Madden? I'm the Al Michaels. I forget. Which was
Yes,
that?
yes.
Yeah, that's how it goes.
I am the John Madden to your Al Michaels. And this buy the stock over here. It's just going to go up. And that's what it is.
So let's dig a little bit more into Taiwan Semiconductor. The Taiwan Semiconductor Manufacturing Company manufactures and sells integrated circuits and, surprise, semiconductors. It's in its name. It also offers customer service, account management, and engineering services. I always talk about the gross profit margin. I like it to be above 40%. For the last fiscal year, we were at 52.44%. Even better gross profit margin for quarter 2 in FY21 was 75.91%. That's great. We really want companies with high gross profit margins and inflationary environments so that we know they can eat whatever cost is going to come their way. Now the return on... Go ahead.
And right now, sorry, I don't have my little hand thing here to raise my hand, but right now is definitely a high inflation environment. And it's going to be that way for, at least, I would say 6 more months before we see any kind of turnaround, if we're going to see a turnaround. 3 to 6 more months if we're going to see a turnaround. And then in 3 months we review and see, and every month actually you review and look, is there a change in the economy that we see something happening? Right now, yes.
I do think with the supply situation that we are going to see a turnaround in that regard. I think by this time next year, and Jamie Dimon from JP Morgan said the same thing, that this time next year the supply constraints aren't going to be a thing anymore. This is another reason why I'm picking Taiwan Semiconductor, because there's a huge amount of pent-up demand for electronics like the Sony PlayStation 5, the Xbox Series X, and automotives. And once we start to see that supply situation clear up, I think these companies are going to have it hit their bottom line very well. There's going to be a big snapback in demand because the supply situation is going to clear up. That's my base case.
If Jamie Dimon and Brandon Beaver are correct, then yes. Yes, 100%.
All right. So we talked about the gross...
I think you're a good company there, by the way.
Gross profit margin gets a big 2 thumbs up from me. Return on equity for the past year is 29.85%. Once again, anything above 15% for the return on equity is great. I think the average S&P 500 has about 10%. That average S&P 500 stock's about 10%, I think. Go ahead, Dave.
So just to give some basic definitions here, when we talk bottom line, top line, I know most people who trade stocks understand what that means. I just want to give a basic definition. Top line is your revenue, and your bottom line is your actual profit. So Brandon's saying when this supply starts hitting again, you're going to see the bottom line, the profit of these companies really jump up once we're able to ship out lots more and manufacturing kicks into high gear, which I agree with if that's the case. I'm just concerned about the overall headwinds to that, such as, i.e., inflation.
Yeah, and material costs too, but this is one of the reasons why I was looking at the gross profit margin as being such an important indicator for Taiwan Semiconductor, because material costs is a headwind here, but a 52.44% profit for the year. I think that's a small headwind. They'll be able to get through it easily.
Is that their profit margin, 52%?
52.44% for the year, yeah. Gross profit margin for the quarter, for last quarter, was 75.91%, so even higher there.
So commodities have jumped up a lot, and some of them over 10%. So if we look down into it, such as, aluminum or whatever the metals is they use, gold, silver, platinum, I don't know, palladium, if they're seeing these jumps in prices, and say it's an overall jump of 10% in the commodity market, because right now they're moving faster than other areas. That's our biggest point of inflation is commodities right now, i.e. especially oil. But 10%, that would take their gross profit margin about 42%, wouldn't it? Because their costs are just jumped up 10%.
Well, we haven't seen that yet.
Am I making it too basic?
The only thing, if they can increase their prices to go along with it, then no, that's not going to be the case. If they can pass that cost on to consumers and to other businesses, then they won't see that. And I think that they can. I think that semiconductors are such a high demand product that they should be able to price that, to pass that along. This is a fairly high competitive business, but this is a company that outperforms greatly and has a lot of different customers, as I mentioned earlier.
So if they pass that on, then you're going to see things such as what, Apple or these gaming sets, TVs, cars, automobiles. They're not all going to eat that price. They're going to have to pass.
They'll pass it on to the consumer, sure.
And then inflation continues.
Yep.
Gotcha.
But gross profit margin is healthy. Return on equity is phenomenal. Price to earnings is okay, but the current price to earnings ratio is 28.94%. And you can compare this to the industry average right now for the computer and electronic product manufacturing subsector. The average is 40.98. So still a discount to its peers. Dividend is okay. Go ahead.
Are you buying something with a PE of 28, or unless there's high growth potential, which you're saying there is?
There is, and
that would be a case.
Yeah, sure, for sure. Same thing with Facebook. Facebook's right around the same PE, if I remember correctly, but it's
I bring up Micron Technology. You know this one well. This PE story.
Ooh.
Every level it's at 3 PE or 6 PE. You know it. You know what I mean. So I mean. Yeah, I don't know, man. This forward-looking PE, because people will factor in this, and they say, well, this is the stock is priced for 2 years out because of high growth.
Well, that's forward PE, yeah.
And it continues to rise. It continues to rise, and I don't get it because it should make you think and stop. Okay, this is priced 2 years out. What if something happens? You know?
Yeah.
I don't know.
Well, comparatively speaking, we're still looking at a value. For the rest of the industry, Taiwan Semiconductors is at a value. 40.98 for the computer and electronic product manufacturing.
Yes,
I mean, NVIDIA is much higher.
That's true, and I call NVIDIA all the time, so there you go.
Yeah.
Thank you. Touche.
Dividend is sitting tight at a 1.7%. They have improved earnings per share by 16%. In the most recent quarter compared to the same quarter a year ago. During the past fiscal year, Taiwan Semiconductor increased its bottom line, earning $3.50 versus $2.28 in the prior year. $2.28 in the prior year. This year, the market expects an improvement in earnings, $4.05 versus what they did, $3.50 last year. Since the same quarter 1 year prior, revenues have risen by 25.4%. Their debt to equity ratio, it's very low. It's at 0.29 and is currently below that of the subsector average. And this implies that there has been successful management of debt levels. To add to this, Taiwan Semiconductor has a quick ratio of 1.62, which demonstrates the ability of the company to cover short-term liability needs. One of the best parts about this, they have relied only on internally generated funds to finance organic growth, which means they are not selling stock back out to the market. They haven't done that. As I mentioned, they started paying cash dividends. They actually started paying these dividends in 2004. They've never reduced the dividend per share since.
It sounds like a good growth company.
It is.
Company you want to put your money in and just leave it diamond hands.
Continuously growing. This is constant good results, constant return on equity. They don't miss a beat. Management has been great.
On a diamond hand scale, are we doing 5 blings or 1 bling?
5 blings for Taiwan Semiconductor.
5 blings on a diamond hand scale from Brandon. 5 bling diamond hand scale. Buy it, hold it, put some retirement money in it, and let it ride. Gotcha.
Agreed.
All right. Well, that's fair enough, man. That's fair enough. What else you got?
That's all I have. We're 18 minutes into this, so we got enough time for you today.
Thanks, man. Thanks. I gotta hold up the show here and bring it, right? Too bad I didn't bring anything. but I do want to talk a couple of things. I read an article today. Arc Innovation gets a lot of news, and their founder, Cathie Wood, she makes the headlines a lot anytime she talks, right? And she's not going to get wrong. She's a smart person. Earlier this year, I was commending her. I think when we did the first couple of podcasts, I said, hey, Arc's had a great run last year. Was excited to see what it's going. She seems to know what she's doing. Then a few months later, we got on here and like, man, she's been flat ever since. And she's kind of lost her way. Well, the news article today I read on Cathie Wood was she's coming out and saying that because companies are moving from places like New York down to St. Petersburg or from California over to Austin, that's gonna lower inflation. And in fact, she says we should be worried about deflation because of that. Now, I read 2 different articles on this, and I didn't see a single reason as to why that would help inflation or not. What do you think, Brett? Do you see a reason to how that's going to help inflation?
No.
Yeah, so you're in the dark on this as I am. Yeah. They didn't say in detail. It seemed like they were just taking Cathie Wood's, word for it.
The only thing I can think of is its lower tax rates.
Yeah, but how's that going to help inflation?
Well, it would bring costs down.
For the companies?
For the companies, and hopefully they'd be able to pass that on to the consumer. But I think it's such a small percentage that I don't...
All right, Brandon, have you known any business? All right, so let's say I make pencils, right? And I'm selling these pencils for $1 each. I moved my company to another state, and now I'm saving 10 cents per pencil. Am I going to lower my cost of my pencil? No, I'm going to keep it at $1, and I'm going to keep that 10 cent and profit now, and I'm going to reinvest in the company and grow it.
It depends.
I'm not going to go ahead and just pass that on to the consumer, man.
If the pencil industry is highly competitive, then you might lower the cost of the pencil to gain market share.
Maybe it doesn't always. I mean, if you have a high luxury goods as Nordstrom's, they're not going to lower the cost.
No,
it depends. It depends on how you're pricing everything. Apple's not going to lower their costs just because they found a cheaper way to do it. They're gonna take that and they're gonna make the profit and reinvest it in other areas. i.e. their streaming.
Well, that's because they already have a large percentage of the market share for cell phones and services and things like that. So there'd be no need for them to.
So I don't understand what she was getting at. I feel like they're just taking her word and they're writing articles based on what she says just because she's a well-known name. She had a very, very good run with her company and some of her funds, like the Arc Innovation Fund, did very well for a while, accomplished a lot. But she's been flat as of lately, and she doesn't... I don't know if she deserves this kind of attention that when she makes a comment and articles written about it.
Right. No, I don't... She's not a macroeconomist by any means. Not from that article, not from what you're talking about, at least.
Yeah, and I'm not worried about deflation right now. I'm still, every single time we get on here, I'm sure everybody's tired of David. Why are we bringing up inflation again? And
it's everywhere, though. I mean, I listen to the other podcasts. I listen to Bloomberg and CNBC and everything they put out. There's inflation. They're talking about it all the time because it's everybody's number one concern right now.
Yeah, and it should be everyone's number one concern right now. And because you got to, like Brandon and I have talked about, Brandon mainly, he's come on the show and he said, look, when in times of high inflation like this, you got to look for companies that have a big profit margin because they might be able to just eat that inflation and keep and stay competitive with the costs without having to raise their costs.
Yeah, and companies with a low cost of debt is very important as well. When debt is when the cost of debt is increasing, then you don't want a company that's going to have headwinds because of that.
So what you do is you go to Fidelity, guys. You don't even need a Fidelity account. You go to Fidelity, you type in the ticker symbol or the name of the company. It pulls up a page, right? So on this page, there's multiple different things you can start looking at. If you're on a desktop, you have a lot more options than you do a phone. I'll tell you that right from the beginning. So if you have a laptop or a desktop at home, pull it up on that. And you can look into the past earnings reports, and you can see how they broke down their funds, the company, in the past earnings reports. You can see the current headlines going into the current headwinds even are sometimes listed. You get analyst opinions. You can do a lot of research just from going on fidelity.com and plugging in a name of a company and just looking there and look at the profit margins. It's listed. We were just on before the show. Brandon mentioned a stock. I pulled it up on our shared screen here, and you can look at the profit margins. It's right there. It's right there on the home screen if you have a desktop or laptop. Yep. And so it's easy to find, guys. And this is some of the things you look at in high inflationary environments, because companies like McDonald's is going to have to raise how much they're charging for their meals, because they have to pay their employees more now because nobody wants to work for that lower wage, which is, that's what capitalism is all about. That's great. People get higher wages, but, we got to pay more for the burgers. And so, if McDonald's had a higher profit margin, they wouldn't have to raise the cost of the burgers, and then they could keep all that customer base and pay people more. Mm-hmm. And so that's what Brandon and I are talking about, is you want to look for these companies that can eat this inflation right now so that they can stay competitive against other companies with a lower cost.
Exactly. And me not having a job right now, I'm about to eat my way out of this house. Next time I come on, I'm going to sound like the fat Darth Vader.
Yeah. Dave, let's talk about stocks.
I hope not. I do want to go into another topic. That was my inflation rant for today, guys. That's all I wanted to go into. I'm not worried about deflation like Cathie Wood is. Inflation.
No, I would welcome it. I would, especially if we had a good monetary policy, a sound monetary policy, I would for certain welcome deflation. But
yeah, we're
not going to get there anytime soon.
I'll get hit by lightning before we get a sound monetary policy in this country.
I know.
No matter who's president. All right, guys, back to some gaming news. I was showing Brandon an article before we began here, and it seems like they were just copying what we say on this program, word for word. The guy was I don't want to quote his name because I don't want to tear down someone else's credibility, but the article I was reading, it was on Fidelity, and it was talking about NVIDIA and all the reasons why NVIDIA is a great play if you want to play the gaming market. And it's everything we've covered here before. And it's in all the gaming headsets. Everybody's starting to talk about gaming right now because Christmas time's coming up. People want to buy those gaming sets. Shipping's going to be a thing. If you're going to buy the gaming sets, you got to buy it now. So they're pushing you, buy now, buy early, buy early, which means these stores are not going to have the sales that they needed before in times past. So therefore, you're going to have a higher profit margin for a lot of these companies because they don't need these sales. So the retailers are actually going to have a very nice Christmas as long as they can keep their supply chains open. They'll have a nice Christmas because everybody's going to start buying earlier at full price or lower sales price. And so a retail play is something you want to think about. Now, the risk with this, again, is the supply chains. If I go ahead and buy Target stock now ahead of the Christmas season, thinking that during the Christmas season I'm going to get a 10 to 20% jump, but yet supply concerns hit, where we get bad economic numbers, Target's going to take a hit. And you have to really watch if that's your play. Walmart, Target, they're always going to be the ones that really gain during this time. Nordstrom's, Macy's are all the ones to look at. You just got to watch the headlines and make sure that there's nothing about supply chains, nothing about bad economic news where people aren't making money.
Mm-hmm.
But I mean, that's definitely some plays you could look at because the retailers are going to do well. If everybody does what is being told to them to do by the media here, which is go out and buy early, if people really do that in large numbers, then the retailers are not going to have to cut costs. You have drastic 60% off sales. 1 week before Christmas, they don't need to do that. They
right.
covered everything.
Right.
So I mean, that's one thing I've looked at this year is like, okay, I've thought about this. All right, that might be a good play to do some retail. Who knows? I don't know. I'm just offering ideas here, guys. This is what I'm looking at. Maybe take a look at some retailers. Walmart's always a good one.
Costco.
Even Costco's great. Costco seems like it always goes up. I mean, that's like NVIDIA, of retailers. So I love NVIDIA. My next animal is going to be, whether a cat or dog, is going to be called NVIDIA. That's their name. I'm sorry, but Yeah, so I mean that's one. Those are some of the retail plays, and why I'm looking at a possible retail play in the market is because of that. If we start seeing the sales jump in these, but I want to see the numbers, in the next few weeks before I dive in here full head first.
Okay.
Right? No.
Sure.
All right.
Yeah.
I guess that was my thought
that's the
on
other
retail.
thing too.
That was
Like
my thought on them.
we talked, and then we were talking about the September jobs report, and a lot of people were looking at it, hoping for answers, and we got zero. We got more questions than we got answers. So I think now we're looking at the October jobs report that's going to come out in November, and hoping we get answers from that.
Well, I mean, here's the thing, man. We're not hitting GDP numbers as what we need to cover what we agreed to already spend as a government, right?
Right.
All the spending we agreed to cover, our GDP is not growing at a rate that is going to actually cover those bills. So we're spending. So it's like your household. Say you make $50,000 a year in your household. Right now we're spending at a rate of $70,000, $80,000. And sooner or later you got to pay that bill, man. You got to pay that bill, or you're just going to get a junk rating on your bonds.
Right.
And I mean, Brandon always says bonds are dead, but I mean, if a junk rating, I mean, who knows?
We're getting to like I said this last year, or not last year, but last show. I think that we're going to have consistent upward pressure on yields for a while now. So maybe at some point bonds won't be dead. The yield that you're getting right now is still not worth it, but at some point, we may get to the point where, you want to have bonds back in your portfolio.
At some point, just not right now for you, huh?
No. And it's really hard. Like, I wouldn't even buy SPY right now. And normally SPY is the number one go-to, but,
SPY.
If you're buying SPY, if you're buying the S&P 500 Spider Index right now, I kind of get the feeling that you might be the last person leaving the party, if you know what I mean. So, or the last person getting to the party and the last person leaving. Nobody wants to do that. There's just there's too many headwinds and not enough answers to my questions right now. And I think this is a stock picking environment where you want to go and pick individual stocks, high quality companies, and just hold through the turbulence. That's my opinion.
So next week, what I'm planning on doing is to go over what I look for in a chart in a day trade. I'm going to talk about day trading and how I day trade and what I'm looking for when I wake up in the morning and I check the news headlines and I look at these headlines here, and then I start looking at the charts of the ones I'm watching, and then how do I come to the decision? All right, I'm going to day trade this. And how I get to that decision and where I get it from. Because, it is a day trading environment. It's a great environment for me because that's what I specialize in, and that's what I love doing. I'm not a long-term investor like you. I've dabbled recently with Cooler and other ones, and, it's doing okay for me. But, it is a day trade. It's hard to pick where we're going because we don't have the news. The jobs reports aren't giving us the numbers we want, but they did give us one number. They said that 4.3 million people quit their jobs in August.
It's crazy.
And that's the number that came out today.
I mean, I wouldn't have guessed that. Well, I mean, I left in September, so.
There you go, right? So, but they're saying that's a sign of of that they're highly, highly confident they could find another job somewhere else.
Yeah. Well,
we have people leaving their jobs like that.
I think the economy's retooling a bit. We'll see how it plays out. There's a lot of people that are looking for different careers and different work environments, and we'll see if they get them.
Right. Who knows? I wish them the best. I hope they have skilled backgrounds and experiences so they can move up and get move up to a better position and better job. Or, a lot of people said during the pandemic too that a lot of moms decided to stay at home now. They were making enough off of one income that they decided not to go back to work. There was 1 million people that made that decision. 1 million women, that made that decision according to CNBC.
Yeah.
And so that's a big decision there too. There was also about 1 million people, again, according to CNBC, that said 1 million people over age 60 that made a decision to retire early.
Yeah, and then you couple that with the fact that we have an aging populace here in the United States. So there's a lot of people retiring, and a lot more people retiring than what are entering the workforce. We already had that issue pre-COVID-19, and this is just forcing people to think about retiring early. A lot of them are retiring early, and it's just compounding the labor shortage that I think we were already working up towards to a certain extent.
Yeah, because of the whole baby boomers retiring into the age and moving on, and that was a big generation. And if people don't understand, so some of our listeners maybe don't know why that affects everybody so much, is because the baby boomers are called that because during that generation there was a boom in population. And the baby boomers are that boom, that population growth that happened all of a sudden within just a couple of years. And this group of people that had this massive growth in population are getting ready to retire. And so, you go from like X amount of people to now all of a sudden a huge jump in the population of retirement, and can us as a economy support that? And that has been a question for like the past 5-6 years. It's been brought up, and then all of a sudden COVID hit. And now a big chunk of this population group is saying, I have enough. I'm comfortable. I can go ahead and retire early. And they're doing it. And so like Brandon's saying, that's creating issues that we weren't ready to tackle on at this moment in time, but we were aware of that it was eventually going to happen.
Yep.
And so, I mean, how do you trade that? How do you make money off that?
That's a good question. We can look into that. I don't think you can off that. I don't know.
Is LinkedIn going to be a good target?
Fixed income
fund? Are we buying companies like Indeed? Are we looking at all these companies saying, hey, I want to own them because they're going to make a lot of money in the next few years?
I mean, this is not a recommendation, but maybe Kelly Services. I don't know. I haven't actually looked into Kelly Services in my mind. That was just a name that just popped up in my head. Fixed income funds, maybe. Because you got a lot of people on fixed incomes that are going to be paying commissions to, their Roth IRAs when they, I don't know. Do they pay commissions when you don't pay a commission on a Roth IRA when you cash it out?
You pay a commission to or a fee for the particular fund you're invested in. Okay. And usually it's something small like 0.5% or 0.5% to 1.5%. It's never usually a huge fee, but there is a yearly fee there, and it's taken out, I believe, monthly or every 3 months, quarterly, for managing that fund.
Yeah. Well, I mean, if people are cashing out, then that wouldn't be a good play. If there's more people cashing out than going on.
And if you're going to play funds, I mean, the biggest fund provider in the world is what, Fidelity?
Yeah.
You might as well just go ahead and buy Fidelity, thinking that everybody's going to get into funds. I believe people are going to start leaving Robinhood. Where are they going to go? They're going to go, what, Webull is one option people go to. Where's another one?
You're trading one for the other, in my opinion. I think Robinhood and Webull are same business model.
So the reason why people like Robinhood, Brandon, is for the ease of trading options. It's not necessarily the stocks, because you could get Fidelity and you could understand what you're doing with stocks and Fidelity. I believe it's it's doing option trading for free and how easy it is to understand.
Yeah, I agree.
So
it's not.
I believe it's Charles Schwab, Fidelity, E-Trade, all these other companies started making something similar where it was easy to understand and comprehend, and then also have that free aspect to it if you choose. I believe that they would take all the business from Robinhood.
It's so simple. It's too basic, though. Like, if you're looking at this, a beginner could not construct their own spread. Maybe you could do a debit spread or a credit spread basic, but, like, even doing, like, an iron condor on Robinhood, like, you have to really know what you're doing, or you have to go on to, like, TD Ameritrade's website or Thinkorswim or something and copy it from there. You have to have somebody else showing you how to do it, because you can't construct a regular spread or a complicated spread on Robinhood. But so it's too simple for me. But
credit spreads. Brandon's going to have that article on the website by next
at
podcast
some point
for the credit spread, explaining what a credit spread is and how to actually create a credit spread. So
here's the thing: you want to look at the implied volatility of an option. You want to play the top or bottom end depending on how you're doing it, okay? And you want to have a certain amount of money that you're going to make. So like you want it's already on. So if you're getting a $50 credit on it, then you know what you're going to make, right? But you want to calculate it in your head. Okay, if I played this 10 times, and say for example it's got an 80% chance of profitability. If I win 8 out of 10 times, but lose 2 out of 10 times, am I still going to be in the green? And that's like the most important question to ask yourself. Like when you're playing spreads of any kind, like if I win 8 out of 10 times at 80% profitability, does that 2 times that I lose wipe out all my profits? Because if it does, it makes no sense to play that. It makes no sense mathematically whatsoever. So that's the gist of it. And there's, you know, there's different numbers for different kinds of spreads and things like that. I'll go into it on the article.
Yeah, I'm waiting with bated breath for this article next week. One last mention, guys, from me is EA just continuing it still with FIFA. So we're going to get yet another FIFA coming out. They just inked that deal, if you will, this week. So, yay. FIFA 2022 or 23, I don't know. FIFA keeps rolling them out, man, every year. Same game, different title. No, I'm just kidding. That's just me. That's just me ragging on FIFA. I know we have a couple of FIFA players out here who love the game, but I'm just ragging on them. But yes, that was a deal that was inked. So Electronic Arts looks like a good play. I like Electronic Arts, Activision. I actually agree with the article that Brandon and I were reading ahead of time about Take-Two, though. They are lacking depth on their gaming's chart there. They're relying on Grand Theft Auto and Take-Two.
They've got sports. I mean they've got NBA 2K, and they've got a few other sports games that they rely on, especially the NBA game. I don't really care for the WWE games. I mean, I am a pro wrestling fan, but the WWE games have been very lackluster. But NBA games are pretty good. They've been pretty on spot for Take-Two.
All right, cool.
The question is, what are FIFA's global sales? It's more of a global sport than NBA or football, of course.
It is, and they have worldwide. I don't know if anybody knows this or follows esports, but FIFA is a big esports competition. They have global competitions and they have national competitions, and usually there's upwards of 7 figures for the national winner or global winner in these FIFA competitions where you play another person in a 10-minute match or something. I actually work with a gentleman who ended up in, I don't know, 10th in the world or 12th in the world, and he always tells me about it and those competitions that they have. And so it is a big deal, and there's a huge esports deal, and it's good that EA Sports is getting it. I thought EA Sports was a good buy in going into the holiday season already, but this will definitely help their repertoire solid, so they're going to have continued profitability for the next couple of years because of this.
Yep. Madden always adds to that, of course.
Buy the stock. All right. What do you got, Brandon? Final thought.
We just talk about this every week. You got to hammer it home. Find quality stocks with low depths and high gross profit margins and good return on equity, and the price to earnings should be at a good discount. In this environment, you just pick stocks that are getting beaten down, and there's been an overreaction to the downside. That's what I got.
Talking about overreaction to the downside, guys, keep an eye on UVXY. If you wake up and the news is horrible and you're able to buy UVXY pre-market, I would buy it pre-market and then sell it when the market opens, because you'll probably make a good 2 to 5% return on your money if the news is horrible when you wake up in the morning. UVXY is definitely one that's on my radar for this week. I'm watching it carefully like a hawk. I'll post on Instagram if I'm able to when I see an opportunity for UVXY this week. But that's one I'm watching.
You could do UVXY. You could do it with a small portion of your portfolio, because oftentimes you'll get a 10 to 15% jump on it if things get really volatile.
Yeah.
And you're not. And the other thing is too, if you've got a slow burn on the market, then UVXY doesn't always work because UVXY tracks volatility. So it's got to be surprise scares to the market. Once those happen, though, you could get a really big jump on that, and you're hedged nicely against the other longs that you have. So
you took the words right out of my mouth, man. See, guys, this is what I'm talking about. I say, oh, UVXY is a buy. Brandon's like, well, if you look at the edge volatility, you know what I mean? He goes into depth. That's why I'm the John Madden. He's Al Michaels. Other than that, guys, I love gaming stocks, and I'm always going to keep an eye on that. Next week, I'm definitely going to bring you guys something about day trading and how I find day trades, what I look for, what's going on. I'll be more in depth on that. I don't believe Cathie Wood. I don't believe that I need to worry about deflation. I'm still concerned about inflation for at least the next 3 months, unless I see data otherwise to prove it. So that's my final thoughts, guys.
UVXY. You ain't got no alibi.
Follow us at Chinchilla Pickin' on Instagram. Please follow us. Give us a like. DM us anytime with any questions. We'll bring them up on the show. If you DM us a stock you say you want us to cover, we'll cover it. We'll look into it. We'll review it. We'll tell you our thoughts on it. It's just two guys' thoughts. You know, one of us is not as smart as the other. I'll let you decide who's who. Anyways, we hope you guys have a good night. We hope we've been entertaining, educational, and uplifting because we want everyone to make money.
Have
a good night.
All right, have a good night.